The federal government today released a list of considerations for the purchase of the Transmountain Pipeline. It states that delays in construction can negatively impact the final sale price. Our next guest says the pipeline itself is not the problem anymore. It is the lack of direction this project faces. Tahmazian is joining us now. He's a senior portfolio manager at Canoe Financial. Rafi, good to be with you and get your perspective as always on our energy sector here in Canada. But let's step back a little bit. The PBO is saying that the federal government may have paid too much for this pipeline. Your reaction?
Well, if we're gonna dissect that, I'm not going to really trust the PBO. I'm not going to trust the government. We are in the business of analyzing companies, transactions, and they are subject to independent audits by independent accounting firms. And the oil and gas companies are accountable to independent reserve agencies. So I think in this situation, it's a very appropriate situation where the government should actually publish a year-end audited report of the asset they purchased and come clean with it, because trying to understand really what this is and the amount of smoke and mirrors this government typically is used to giving everybody and wordsmithing, it's time we got the real numbers.
You don't think these are the real numbers? What do you think the real? No. What do you mean by that?
Well, what is the revenue? What's the EBITDA the asset generates today? People think we bought a pipeline that satisfies the needs of Alberta. At the most basic level, that is ridiculously stupid. Okay, we bought an old pipeline that was probably at the end of the day on the books, Kinder's books, for about $1 billion and a half dollars. When they bought this asset off Terracin many years ago and then subtracted all the other assets, this thing was left. And they even made us pay for the $1.1 billion that they say they've incurred for the building out the new pipeline or twinning the pipeline that isn't even in the ground yet. We probably didn't even audit that number. So from a business perspective, that management would be fired by now. So we just need to see those numbers. I think they're generating, and again, we're guessing, about $200 million a year. That's what one of my partners at work came back to me with, based on what we think the tolls are and everything. But you're speculating because you don't get quarterly numbers that they're obligated on. If they're generating $200 million in EBITDA against a $4.5 billion purchase, that's the highest multiple valuation acquisition that's been done in the country's recent history.
Is that right? What valuation metric should we be looking at if you're talking about that's the highest valuation that would be ever?
205 for that would be 23 times your EBITDA valuation, 23 times multiple.
That's higher than
tech. 200 million it's generating.
That's higher than tech companies.
What are we? Yeah, but the problem is maybe it's generating 400 million, maybe it's trading 600 million. But we don't know. It's a black box. But every quarter in a private sector business, I get a quarterly report that is subject to audit at the end of the year, and I can make decisions. But this government just is shrouded in secrecy, and we can't make the PBO, the government, whatever they're saying, it's all fluff. So it doesn't matter. What we can tell is we have gotten further behind than ahead of when they purchased it, because now all of these delays through the left-leaning courts that decided there needs to be more scrutiny. The government has gone completely quiet, so we don't know where they're really at, whether they even want to do it. They are clearly in a conflict situation with voters and constituents because they don't want to build it to satisfy their green movement, but then they do want to build it to satisfy the economic stupidity of purchasing it. So it's a total bungle.
So, but Rafi, one of the comments, of course, is that if we continue to see delays of this pipeline, presumably the value will go down, or at least the price that you can attain from potential investors, institutional investors, private equity firms around the world would likely go down as well. So that $4.5 $1.5 billion that was paid by the Canadian government, if that was an overpayment to begin with, what are we going to get from any type of institution that would be interested in buying this, and how do you sell this deal?
Well, you truly cannot expect a foreign party to come in and buy this. No one's coming into Canada and buying right now. This place is the plague. So until the election in November, depending on the result there, is whether we can get speculative capital back into Canada or not. But at this point, there's no capital coming in. So it has to be someone within Canada. And yeah, the longer you delay, remember, what is this thing worth anymore? Because the higher the cost of building it, which is now up another 30% from where they originally thought when they bought the asset. The build out of the twinning was 7.5. Now it's 9.5 billion to build, and if you add in all of the other bills of Bill C-69 and 48 and all of these challenges that potentially could, and the continued social license and the protesting that is encouraged by the government, all of these things develop longer periods of time, significantly higher costs that will erode away the ultimate return, and then the value will diminish. Absolutely, 100%.
Rafi, just to conclude here, what is astounding to me, just to kind of go back to the top of the conversation, and to put this in regular, non-financial terms, when you say that this is the highest multiple ever paid for a pipeline, 28 times EBITDA, if in fact it generates $200 million a year, tell us exactly what that means in terms of, a viewer watching us for the first time talking about EBITDA.
Well, it's the cash flow that you generate. So there's volumes that run through these facilities. And then the people who run these volumes pay a toll, and that toll is a fixed rate. And again, we don't know exactly the volumes. We don't know the toll specifically. So you have to use really high-level numbers to try to calculate it. Look, if it's more than 200 million based on the limited information we have, then let us know.
Yeah.
And do it in the form of an audited financial. Okay. But if it is $200 million of cash flow generated, you have to think about that cash flow, and then you have to try to recover all your costs from that. It'll take 25 years to do it.
Rafi, if 28 times though, if it is 28 times in terms of how much the multiple that they paid, and that's the highest, what would be the next highest? I mean, I don't know. Is it 15 or is it 10? Just to give us an idea in terms of how much more they paid for it versus
your
a
midstream
company.
What do your midstream assets trade at in Canada today? A value would be, markedly below that valuation, to the tune of maybe half. I don't know on average, to average it all out. But that's what they would trade at. So do you pay a premium to the tune of double for something that no one else wanted? No, you would probably pay a discount for it. So that's the difference between a government acquiring something and another private sector company acquiring it. First of all, it would have taken way more months and a lot more due diligence. This thing got done so fast. The due diligence must have been a fiasco.
All right, Rafi, we got to leave it there. Great to see you. Thank you.
Yeah, take care.
Thank you. You too. That's Rafi Tahmazian, Senior Portfolio Manager at Canoe Financial.